Hi everybody, Jim Crimmins here from SBF. Thankful that you're with us today. We've got a short webinar concerning cash flow and cash flow journals. If you were trying to get on our webinar last week, I apologize. As you know, it didn't come off. What had happened is I had installed a new piece of software on my computer that had a firewall that was blocking everything else. I couldn't get it off that night. It took me 3 hours the next day to get it off. So anyway, I do apologize, and hopefully it'll never happen again today or again at all. Our contact information. And I've got to tell you right up front, I've got the Phoenix crud today. I've had it all week. I hope you haven't been suffering with it. It's bad stuff, I'll tell you. Here at the office, we've had half of our crew out at one day or another. So today's webinar, we're not going to sell anything, really. We're not trying to sell you anything. I know that if you watch a lot of webinars, that's unusual, but we're not. If you've got questions, on your dashboard there's a question box that you can type them into. I won't interrupt the program to answer them, but I'll get them all answered at the end. Excuse me. And then again, if you have a question you don't want to ask in front of the whole audience, a personal question, you can email it to me at jimc@smallbusinessfinancials.com. Be more, and you can also see that we do have a live chat now. On most days, you can reach me right on the website with any question that you have. Be more than happy to chat with you. I've got a question for you, and this question comes about because when I was teaching business in college, two of the hardest things that I had to try to get the students to understand, first of all, was the balance sheet. That was our webinar last week. Mike, when are we going to redo that one? Can you tell us? Yeah, I thought Mike was on, but apparently he's not. I'll try to get you a date when we're going to redo the one on the balance sheet. The other thing was cash flow. People misunderstand cash flow a tremendous amount, and I think that some of the failure of small businesses would stem from the fact that the owner of the business just didn't quite understand cash flow. Here's a question for you. If your P&L reports your bottom line to be profitable by $250,000 at the end of the year, what was your cash flow for the year? Okay. With this information, there's no way to tell. You may have had other sources of cash during the year other than your sales, bank loans, or additional capital. You could have had additional expenses that didn't show as an expense against you, such as buying some large equipment that you're going to depreciate. So anyway, it's reported that a third of today's businesses failed due to lack of cash flow. And one of the reasons they have a lack of cash flow is that they don't pay attention to it on a daily basis. Excuse me again. As a business owner, you should be receiving a statement of cash flows at least monthly, and I like to get mine weekly so that I know what's come in and what's gone out and how much we have there as a cushion. Because the main purpose of a cash flow statement is to warn you in advance when cash flow might get dangerously low. This will allow you in advance to plan about how to get around that period rather than waking up one morning and not having enough cash in the bank to pay your employees. Well, what is a cash flow statement? It's a simple statement. It identifies when cash is coming in, and it only deals with actual cash transactions, not with depreciation or other items that are non-cash. The first thing that should happen is you should have an annual cash flow, that when you do your annual budget, that there is a cash flow statement attached to that. But as most of us know, annual budgets, while they're a good exercise to go through, it teaches you a lot. Until you've been in business 3, 4, 5 years, they're not very accurate, because you're doing a swag. So really what I like to do is to look at it on a monthly basis. This is going to give me ample warning if I'm going to have a problem sometime during that month. And since it deals with cash inflow and cash outflow, the first step in preparing your statement can be accomplished by preparing a worksheet for cash to be paid out. Now, you probably have your accounts payable set up. You know when your payments have to go out. If there are recurring payments, you know when they're going to go out during the month. Then the other thing is, on the other side, you're going to prepare something that shows when the cash is going to come in. Now, if you're a retail or service business that relies on customers for cash, you can use past history to make this. You can say, okay, past history, and I think we're going to have a 10% gain this month, so pad it by 10% from last year. Whatever you feel is legitimate. But if you can create an accurate budget by identifying the categories of expenses and obligations, excuse me, don't get too close to the phone, you might catch it. So you're going to identify the actual categories of expenses and obligations you're going to have and the projected amount of cash that you've got coming in each category. You start with doing just what I've got on here, cash on hand, your sales using history plus any increase or decrease that you see, any miscellaneous income. Maybe you're going to hit the Powerball last night, add that in there. Any sale of any long-term assets that you're going to have. And you can see the explanation there. So this is then going to give you the total cash available at the end. Now the cash paid out is going to be just like it says. You're going to do inventory purchases, your variable expenses that change every month, your fixed expenses such as your office rent, any payments that you have that stay the same month after month, then any capital assets you're going to purchase, and this will give you a total of your cash out. The only exception being is if you're going to take some money out of the business, then you want to make sure you account for that also, and that will give you the total cash to be paid out. The next thing you do is you marry the two. Plus cash receipts minus cash out leaves you an ending cash balance. Now, I would hope that if you've got an accountant in-house, that the accountant has been trained to do this. If you're using an accounting service, I would hope that the accounting service, upon your request, would be able to prepare this for you. They may need to talk to you to be able to do it. But it's extremely important, not only from the fact that you might get to the month where you don't have enough money to pay the bills, but let's look at the other side, the glass half full. What happens if the money that you have, the cash, is getting to be bigger and bigger? Would it be better to invest some of that money where you're drawing some type of interest? You might want to buy some bonds, put it in a CD, something like that. You know, if you're not sure how your cash flow is going to be for the rest of the year, you may not want to lock it up long term. But the cash or the glass half full would say, hey, I think I'm going to have surplus cash this month. What should I do with it? Another management decision, another cash flow decision. So anyway, I think cash flow statements are one of the most important things you can have. Now, our next webinar is going to be next Tuesday at 12 o'clock. And I spent 2 or 3 weeks putting this webinar together. Can you survive an IRS audit? What do you need to do? Very, very interesting stuff. I hope you'll be with us there. I'd like to answer any questions that you might have now. Let me get to the question box. I don't see any questions. Nobody has any questions, guys and gals? Good afternoon, John. How are you? Nice to see you. Thank you. Okay, well, listen, we'll turn this off at this point, and I hope to see each of you next week, and I hope not to have this cough next week. Thanks again. Root for the Cardinals. Bye.